Hello and welcome to the Trading with WebRDD YouTube channel. Gold has finally reached the 4,000 level. Yes, yesterday gold reached the 4,000 mark without any trouble. In my last video, I mentioned that sometimes gold could show a pullback before reaching the 4,000 level, but gold reached that milestone without any trouble at all. After that, you can see some pullback from yesterday and in this morning's session. If you check the daily forecast, you can see there have been 4 consecutive bullish days in the world market. Later yesterday and in this morning's movement, you can see some pullback continuing. It's still showing some bearish candles in the market. On the 4-hour chart, you can see that the 20 exponential moving average is around that area and the price is slightly below that mark. So with the 4-hour fair value gap, this could become a major pullback area. Price might try to fill that fair value gap and it could look to touch that exponential moving average on the 4-hour chart. Yesterday, we did not get any opportunities to enter the market because the price was moving rapidly upward and there was no major pullback to enter safely. That's why I always tell you, if you get an opportunity to enter the market, especially during strong rallies, do not exit without clear confirmation. We were able to enter the market around the 39.75 area the day before, and if you kept that buy order, you would have been able to collect over 8,100 pips. That's very important. And it's also important to know how long to hold that order. Some traders don't know exactly how to exit the market. I normally use the 30-minute chart to plan my exits, specifically watching the 20 exponential moving average. When you see a candle closing below that 20 EMA, it's a key signal that the price might fall further. That becomes the right time to exit. On the 30-minute chart, the 20 EMA helps identify whether dips are temporary wicks or actual reversals. We do not exit the market just because of a wick. But when you see a candle that closes below the 20 EMA, it means the price could fall down, and that becomes our exit point. You can close your order around that area. If you were able to hold that position properly, you would have captured around 6,700 pips, which is excellent. It's very important to understand exit points. Some traders think Fibonacci can help, but that is mostly a mathematical reference. In real trading, I prefer using the 30-minute chart with the 20 EMA for accurate and live decision making. Now, let's dive into today's chart. You can see a major pullback forming around the 42.56 to 46.7 area. On the 4-hour chart, I'd like to draw our new resistance line. There are several support areas in the market, but we didn't get clear opportunities in the last few days to draw proper resistance or support lines. Finally, we have the chance to draw one, and this is the first resistance line we're marking above the 4,000 area in the gold market. Now that we have resistance, I'm going to draw the best possible buying and selling zones for today. I've deleted all of yesterday's zones. As you can see, yesterday we had only 3 zones. All were buy zones. Now I'm going to draw today's zones. You can see there are 3 bearish candles within this big rally. Those are the key candles I'll focus on. This is the first one, this is the second, and this is the third. The last 2 are very close to each other, so I want to find the best area to draw our next buy zone. First, I'll draw the first buy zone on the 4-hour chart, covering the full candle. Later, we'll adjust it for precision, and then I'll fix the top line according to the recent price movement. After that, we can see another good buy area based on the following candle. I'll align that with the current price action. These are the 2 zones I'd like to keep in today's market setup. Since we are still in a big rally, I expect the price might come down to the dynamic 20 EMA on the 4-hour chart, and that would be a very important signal. If that happens, we could get another strong opportunity to enter the market after confirming entries on lower timeframes. Now, let's move to the 1-hour chart. You'll see two big buy zones already formed, and I'd like to reduce those areas to make them more precise. This is our first big buy zone area, and you can see there was a strong pullback there. There's another buy zone nearby, so I'll reduce that range slightly for better accuracy. Our second buy zone should be around that level. It was already touched in the Tuesday market session. That's a fairly large area, so we'll reduce it based on where the major rallies started. The biggest rally occurred around that region, so I'll use that candle as our next buy zone. This is our first buy zone, and if the price comes down to that area, you'll notice it aligns with the 20 EMA on the 4-hour chart. A great position to enter the market. You can also see another minor pullback around the 39.65 area. I'll draw that as a smaller buy zone. These are the three major areas where we can look to enter if prices fall. If price drops further, it could reach the 100 EMA on the 1-hour chart, which aligns with our second buy zone. So we now have 3 buy setups in the market. I'll also draw a sell zone for today. You can see a noticeable pullback in that area on both the 4-hour and 1-hour charts. It's not a big wick, but it's worth marking. That's our only sell zone for today's market. So, to summarize, we have 3 buy zones and 1 sell zone. The price is still showing bearish signs. 3 consecutive 4-hour bearish candles, meaning the pullback might not be finished yet. We can expect the price to come down toward the 20 EMA soon. Now, I'm going to draw the best possible setups that might occur today. These setups will help you enter with confidence. For me, the best possible setup is to buy from the first buy zone if the price drops there after collecting liquidity below the 50 EMA on the 1-hour chart. Then wait until price reaches a 15-minute value gap. After it forms and fills, you can take your entry. Your first take profit should be around the 20 EMA, and the second take profit should be at the sell zone on the 4-hour chart. That's a great setup to enter the market confidently. Also, in this kind of strong rally, I always consider entering the market again after price breaks the sell zone. If price breaks that sell zone with a strong 1-hour bullish candle and closes above it, that's a valid breakout confirmation. After that, switch to the 15-minute chart and enter once you see a fair value gap form with a confirmation candle. That's your second setup. The third setup is around the 39.66 area. That would require a deeper pullback. If that happens, it could create a large bearish downward move, possibly due to big market news or events. The market has been in a very strong rally, so we can't expect a major drop easily, but as we know, anything can happen in the global market. If prices do come down there, we can plan another entry using the 15-minute fair value gap setup. Then, manage your first, second, and final take profits accordingly. These are the 3 main setups I'd like to focus on for today's market. Thank you very much for watching my video. Please subscribe, share, and leave a comment if you found value in these forecasts. Okay. If you'd like tutorials or have specific topics you'd like me to explain, please leave a comment. I'll be happy to help you with that, to help